While everyone around me is panicking and selling, I am doing the exact opposite. I am buying Bitcoin aggressively right now. And I know what that sounds like. It sounds crazy. It sounds like the kind of thing someone says right before they lose everything. But stay with me for the next few minutes, because by the time this video is over, you are going to understand exactly why I think this moment, right now, in 2026, might be one of the most important buying opportunities Bitcoin has ever offered. The price has dropped more than 50% from its all-time high. The headlines are negative. Social media is quiet. Nobody at dinner parties is talking about Bitcoin anymore. And that silence, that absence of excitement, that feeling that the party is over, that is exactly what I have been waiting for. I have seen this before. Twice. And both times, the people who bought when everyone else was afraid came out on the other side of the cycle in a completely different financial position than the people who waited for things to feel safe again. So let me walk you through everything. The history, the data, the reasons for the crash, the reasons I am still buying, and the exact strategy I am using right now. No hype. No promises. Just the most honest analysis I can give you. Let us start with the history, because if you do not understand the pattern, the current price movement is going to look like chaos. And it is not chaos. It is a cycle. In early 2020, one Bitcoin was worth approximately $7,000. That feels almost unreal to say now. $7,000. At that point, most people had written Bitcoin off. The excitement from 2017 had long faded. The technology had been called dead, fraudulent, and pointless so many times that most ordinary investors had stopped paying attention. Then something happened. The Federal Reserve cut interest rates to near zero and began printing money at a historic pace in response to the pandemic. And suddenly, assets that held value outside of the traditional financial system started to look very attractive to a new category of investors. By March of 2021, Bitcoin had climbed to $60,000. Almost 10 times its value in less than a year. The excitement was everywhere. News channels were covering it. Your coworkers were talking about it. People who had never owned a single share of stock were suddenly asking how to buy Bitcoin. It peaked at $65,000 in November of 2021. And then it fell. Hard. By the end of 2022, Bitcoin had dropped to $16,000. A drop of approximately 75% from its peak. The headlines were brutal. FTX, one of the largest crypto exchanges in the world, collapsed in one of the most spectacular financial frauds in recent memory. The narrative around Bitcoin shifted completely. People who had been enthusiastic just 12 months earlier were now saying it was over. That it had always been a scam. That anyone who still believed in it was delusional. I bought during that period. Quietly, consistently, without telling anyone at dinner parties, because there was nothing exciting to say. I just kept buying. Then 2023 came, and the price started recovering slowly. By 2024, the momentum had returned. And then something happened that changed everything. That something was the single biggest structural shift in Bitcoin's history. And if you do not understand it, you cannot understand why the price did what it did in 2024 and 2025, or why what is happening right now actually matters. Stay with me. In January of 2024, the United States Securities and Exchange Commission approved the first spot Bitcoin ETFs. If you are not familiar with ETFs, here is what you need to know. An ETF, or exchange traded fund, is a financial product that trades on traditional stock exchanges. It allows investors, from individuals with a few $100s to massive institutional funds managing billions, to gain exposure to an asset without having to directly buy and store that asset themselves. Before these ETFs existed, large institutional investors, pension funds, insurance companies, major banks, had significant regulatory and operational barriers to buying Bitcoin directly. The approval of spot Bitcoin ETFs removed most of those barriers overnight. The results were immediate and historic. On the very first day of trading, spot Bitcoin ETFs moved approximately $4.6 billion in volume. That was not a typo. $4.6 billion. In one day. For the next several months, money poured into these ETFs at a rate that the market had never seen. Institutions that had been watching Bitcoin from the sidelines for years finally had a clean, regulated, audited vehicle to participate. And they participated aggressively. This institutional demand, combined with the political environment created by the 2024 presidential campaign, in which the winning candidate explicitly promised to make the United States the global capital of cryptocurrency, to create a strategic Bitcoin reserve, and to pass legislation giving digital assets clear legal status, drove Bitcoin to levels that nobody had ever seen before. By late 2024 and into 2025, Bitcoin reached its all-time high of approximately $125,000 per coin. Think about that for a moment. From $7,000 in 2020 to $125,000 in 2025. Anyone who bought during the silence of 2022 and 2023 and held through the noise of 2024 and 2025 experienced one of the most remarkable wealth-building events in modern financial history. And then it fell again. Here is the part that most people are getting wrong right now. They are looking at the 50% drop and seeing a story of failure. I am looking at the exact same drop and seeing something completely different. Let me show you what I see. Bitcoin is currently trading at approximately $60,000. Down more than 50% from its peak. And the reasons for this drop are real. I am not going to pretend they are not. The first reason is leverage. During the peak of the bull market, enormous amounts of Bitcoin were purchased using borrowed money. This is called leveraged investing, and it amplifies both gains and losses. When the price started dropping, the platforms that had lent money to these investors began automatically closing their positions to protect themselves. This forced selling created a cascade effect. The more Bitcoin fell, the more forced selling occurred, which made Bitcoin fall further, which triggered more forced selling. It is a vicious cycle that can drive prices far below what fundamentals would otherwise justify. The second reason is institutional outflows. The same ETFs that drove enormous buying pressure in 2024 started seeing more money leaving than entering in the latter part of 2025. When institutional money moves, it moves fast and it moves in large amounts. The exit of institutional capital from the ETFs put significant downward pressure on the price. The third reason is geopolitical uncertainty. New tariff threats, global economic tension, and a general risk-off environment in financial markets pushed investors towards safety and away from volatile assets like Bitcoin. The fourth reason is simply the cycle. Bitcoin has done this before. It ran up aggressively, attracted enormous attention and capital, peaked, and then corrected sharply. It did this in 2013, in 2017, in 2021. Every single time, the correction felt like the end. Every single time, it was not the end. Now here is what I want you to think about carefully. The structural factors that drove Bitcoin to its all-time high have not disappeared. The ETFs still exist. Institutional access to Bitcoin is permanently easier now than it was before 2024. The United States government still holds approximately 330,000 Bitcoin in its strategic reserve. The legislation that gave cryptocurrency clearer legal status is still in place. The fundamental scarcity of Bitcoin, with a fixed supply of 21 million coins that can never be increased, has not changed. What has changed is sentiment. People are scared. And scared people sell. And when scared people sell, prices drop to levels that patient people find very interesting. I am a patient person. Now I want to address the most important question directly, the one that is probably already forming in your mind. What if it keeps falling? What if this time really is different? I have a very specific answer to that, and it changes how you think about the risk entirely. What if Bitcoin keeps falling? It might. I want to be completely transparent about that. Bitcoin could drop to $55,000. It could drop to $50,000. In a severe global economic deterioration scenario, it could go lower than that. Anyone who tells you they know exactly where the bottom is should be viewed with deep skepticism. Nobody knows. I do not know. The smartest analysts in the world do not know. But here is the thing. Not knowing where the bottom is does not mean you cannot have an intelligent strategy for navigating the situation. It means your strategy needs to account for the uncertainty rather than trying to eliminate it. The strategy I am using right now is called dollar cost averaging. And it is the single most powerful tool available to an investor who wants to accumulate an asset over time without the stress of trying to time the market perfectly. Here is how it works. Instead of trying to identify the exact bottom and putting all of your available capital in at once, you invest a fixed amount at regular intervals regardless of the price. If Bitcoin drops 5% in a week, I buy. If Bitcoin stays flat for a month, I wait and buy on my next scheduled date. If Bitcoin drops another 15%, I buy more. The goal is not to own Bitcoin purchased at the perfect price on the perfect day. The goal is to own a meaningful amount of Bitcoin accumulated at an average price that is well below what I believe the next cycle peak will be. This strategy removes emotion from the process. It removes the paralysis that comes from trying to make a perfect decision in an uncertain market. And it means that every additional drop in price is not a reason to panic. It is an opportunity to accumulate more at a lower average cost. There is another critical piece to this strategy. Position sizing. The amount of money I am putting into Bitcoin right now is money I could afford to lose entirely without it affecting my financial stability. This is not money from my emergency fund. This is not money I need for rent or food or my children's education. This is money that has a job, and its job is to be patient. If you are considering doing what I am doing, this is the most important thing I can tell you. Only use money that can genuinely wait. Money that might need to come back out in 6 months is not the right money for this position. Money that can sit for 2 to 3 years and wait for the next cycle, that is the money that belongs here. Let me tell you why I am genuinely optimistic about where Bitcoin goes from here over the next 2 to 3 years. First, the macro environment is shifting. Interest rates have been elevated for an extended period. Central banks around the world, including the Federal Reserve, are watching economic growth slow. When central banks begin cutting rates, and history suggests they eventually will in response to economic slowdown, money becomes cheaper. Cheaper money tends to flow into higher risk, higher reward assets. Bitcoin has historically performed very well in low interest rate environments. Second, the ETF infrastructure is permanent. The institutional on-ramp that was built in 2024 does not go away just because the price dropped. When institutional sentiment shifts back to risk on, the mechanism for them to buy Bitcoin quickly and in large amounts is already in place. That was not true in previous cycles. The speed and scale of potential institutional re-entry in the next bull market could be unlike anything we have seen before. Third, the supply dynamics are working in favor of long-term holders. Bitcoin has a hard cap of 21 million coins. Approximately 19.5 million of those have already been mined. The remaining supply comes out slowly through a process that gets cut in half approximately every 4 years. This event, called the halving, reduces the rate at which new Bitcoin enters the market. History shows that the 12 to 18 months following a halving have consistently been some of the strongest periods for Bitcoin price performance. Fourth, global adoption continues to grow. More countries, more businesses, more financial institutions are integrating Bitcoin into their operations every year. The number of people who own Bitcoin globally continues to increase. Every new owner is someone who now has a personal financial interest in the success of the network. None of this guarantees a specific price target. I am not going to tell you Bitcoin is going to $200,000 or $300,000 or any other number. Anyone who gives you a confident price target for a volatile asset is selling you confidence they do not actually have. What I will tell you is this. The fundamental case for Bitcoin as a scarce, decentralized, globally accessible store of value is stronger today than it was in 2020 when it was at $7,000. The infrastructure supporting it is more robust. The institutional participation is more established. The regulatory clarity is greater. And the price is sitting at roughly half of its all-time high. That combination of factors is why I am buying. Before I close, I want to spend a few minutes on what I am not doing, because I think this is just as important as what I am doing. I am not putting all of my investment capital into Bitcoin. Bitcoin remains a speculative asset. It is volatile. It can and does lose 50 to 80% of its value during bear markets. Anyone who tells you to put your retirement savings or your emergency fund or your children's college fund into Bitcoin is giving you dangerous advice. I keep Bitcoin as a defined, bounded portion of my overall portfolio. A portion I can afford to lose entirely without it changing my life. I am not using leverage. The cascade of forced liquidations that contributed to the recent crash is a perfect illustration of why borrowing money to buy Bitcoin is an extraordinarily risky decision. When it goes wrong, it goes catastrophically wrong. I only buy Bitcoin with capital I actually own. I am not checking the price every hour. This is harder than it sounds. When you own a volatile asset, the temptation to monitor it constantly is real. But constant monitoring leads to emotional decision-making. And emotional decision-making in volatile markets is how people buy at the top and sell at the bottom. I check the price when I am scheduled to make a purchase. Otherwise, I leave it alone. I am not telling anyone this is the right strategy for them. Every person's financial situation is different. Every person's risk tolerance is different. Every person's time horizon is different. What I am sharing in this video is what I am doing and why. It is not financial advice. It is a transparent look at my personal strategy and the reasoning behind it. What I am doing is buying Bitcoin slowly, consistently, and patiently with money that has time to wait. Because in Bitcoin, as in most things worth having, patience has always been more valuable than perfect timing. Here is where I want to leave you. The question is not whether Bitcoin is going through a difficult moment. It clearly is. The question is whether you believe this is the end of Bitcoin or another phase of accumulation before the next major cycle. My answer is clear. I believe we are in an accumulation phase. I believe the structural foundations that support Bitcoin's long-term value are intact. I believe the combination of institutional infrastructure, government adoption, fixed supply, and growing global demand creates conditions that have historically preceded significant price recoveries. And I believe that 3 years from now, the people who bought during this silence, during this period when nobody is excited and everyone is afraid, will look back at this moment the same way the people who bought in 2022 and 2023 look back at those years today. With gratitude for the fear that gave them the opportunity. If this video helped you think more clearly about what is happening with Bitcoin right now, share it with someone who is trying to make sense of the market. Leave a comment below and tell me your honest take. Do you think this is an opportunity or do you think the risks are too high right now? I read every comment and I want to know what you think. Subscribe because next week we go deeper into the specific tools and platforms I use to accumulate Bitcoin and how to set up a dollar cost averaging strategy that runs automatically. I will see you in the next one.